Hello and welcome to another episode of the Investing with IBD Podcast. It's Justin Nielsen here, your host. We are coming to you live at 5 p.m. as we typically do on our Wednesdays. Today is October 15th, 2025, and what a difference a week makes in terms of the market. Things were going along swimmingly as we were, chatting on our podcast last week, and then, man, Friday just really kind of took a little turn. So, I think one of the important things here is having a strategy, and to help us out with a strategy that she has developed over time and with wide success, must say, is Vibha Jha returning to the program. How you doing, Vibha?
Very good. Thank you for having me.
Absolutely. So, for those that don't know, Viva has been on a couple times. She's been on our IBD live show. She is kind of almost like a staple now on the leaderboard of the U.S. Investing Championship. You've been up on the top 10 for 4 years now.
Yeah, I was number two of those years, and then in the top 10, the other two. But I'm not going to be doing it anymore. I think 2024
Uh-huh.
was my final year. But now I'm trying to focus more on kind of the education part and then trying to just continue to refine my strategy.
Yeah, and I mean, you've basically kind of proven, hey, yeah, I'm up there. I've gotten the kudos, but that's great. You're doing the education thing, and again, that's why I love having you on, because you really are dedicated to that education part. And for those that don't know, you are basically mostly using TQQQ as your strategy. And for those that don't know, it's a triple leveraged on the NASDAQ 100. So what kind of got you started saying, yeah, you know what? I could I could make things really complicated, or I could go really simple with this one instrument.
So actually, I do use a blend. So I
Right.
have a
Hmm.
blend of the IBD growth stocks, and I use TQQQ. I think I've become more known for TQQQ because it's something that I think it's easier to explain exactly what I do with that. But really, what got me into TQQQ, I wasn't, I had first started using it in 2015, but just like a small position on the side. And in the last 5 years, it has become a much larger percentage of my portfolio, primarily because when I was looking at where I was having success, even from 2015 onwards, a lot of the growth stocks that were in my portfolio were what were known as the FANG stocks at that time,
Right.
right?
Hmm.
Facebook, Apple, Netflix, Google. And then over the last few years, it's been more of like the Magnificent Seven, which include a few additional ones. But when I was thinking about it and based on how large those companies are, I thought, these are the ones that are meeting a lot of my criteria, but they're so big already. How can I boost my returns and still stick with these very liquid stocks? And so I started to put more and more into TQQQ. And then I think the other reason why I've gotten more into TQQQ also is as I'm traveling and doing other things, it's much easier to know one chart very well and to train my eye and to remember whether it's key moving averages or key down days or up days. It's much easier to know one than to keep track of 8 or 10 or even more than that.
Right. And this is one of those things where you, at a certain point, decided, okay, you're a very successful corporate executive for a number of years, and um, I don't want to say it's part of the FIRE movement, since I think that's more of the millennials and Gen Zers that talk about FIRE, which is about retiring early and having that financial independence. But you basically said, oh well, I can actually quit my job and do
Mhm.
trading full time. And it's not that you're spending the same amount of hours, doing that. You have a very full life in which you're doing a lot of stuff with your kids, with your husband, traveling, and just and enjoying it because of that simplification. You're not looking at every last thing. You're like, okay, I'm going to have a very small list of things that I look at, and I'm going to look at those very closely and understand them very well.
Mhm.
Um,
And that was one of the things that I wanted to talk about. I don't know if you want to talk about the market first or if you want me to kind of go into this a little bit, but a lot of people have reached out to me because they want to replicate my style. But one of the things that I tell them is this: your style has to be one that you can execute effectively, right? So
Yeah.
I can share what I do, but and TQQQ is definitely one in particular where you have to have a certain mindset to be able to do it. But I do think the good news with the way I do things, whether it is like the looking at fundamentals, but then staying as long as I can in a stock or using TQQQ, it really doesn't require a ton of time. It requires more time, like when the market is transitioning, either when it's moving up after it's been down, or, when it's starting to like trend downwards, then I have to pay much more attention on a daily basis. But
Hmm.
most of the time, particularly with just having a handful of stocks and TQQQ, I just have to spend a few minutes at the end of the day paying attention to what's happening in the market. And again, when we have a day like we had Friday, now I'm paying a lot more attention right now because I'm trying to assess where is this going. And right now, all we can do is observe, right?
Hmm.
But so I haven't yet made a decision for myself about, okay, is it moving up or is it moving down? Right now it's going sideways. So I'm watching it very closely. But generally, when it is following a trend, whether it's up or down, I tend to just be able to spend a few minutes and it's sufficient to be able to decide what I want to do the next day.
Yeah. So it's really about the transitions
Mm-hmm.
between trends where you need to pay attention. But when things are trending, it's are you moving up stops all along the way, or what is your few minute routine looking like when you're
Mm-hmm.
trending one direction or the other?
Yes. So I tend to pay much more attention to the stops when I initiate a position.
Hmm.
And then if it, like I have a thesis when I go in, right? That okay, this should be going up or this should happen. If that doesn't happen, then I get out. So I do have strict sell rules at the beginning. But once I'm profitable, then my it's more sell signals rather than sell rules. For the growth stocks I own, it's about if I no longer have conviction in the story or if their fundamentals and technicals have significantly deteriorated. For
Hmm.
TQQQ, it's more sell signals. And one of the things I shared with you is I'm in the process of creating a TQQQ masterclass. And one of the things I realized as I've been going through and looking at what I actually do, and a lot of times people talk about, I'm an intuitive trader, which I am, but I've broken it down as I'm going through thinking about how I want to share this and help people. Is I've broken it down to kind of like the science and the art. So the science are more those types of cell signals where you can teach somebody, okay, this is what a downside reversal looks like if they don't already know that, or this is, when it undercuts this key moving average. But the art is really more when it comes to the nuances of, okay, it may be showing a cell signal, but I generally don't make a decision on just one cell signal. I'm trying to look for a pattern. And again, back to the point of, is it is the trend changing? If the trend is
Hmm.
changing, I take action more quickly.
Right. And one of the things that you said at the outset was that a lot of your strategies came from that reflection, right?
Mhm.
You said, "Oh, okay, why did I start gravitating a little bit more towards TQQQ?" Well, I looked at what was working for me, and that was one of the things that was working for me. So what does your post analysis look like?
It's, you just, it's almost like I told you what to say because you just gave me the perfect segue into it. So, in my post analysis, one of the things that I focus on, and which is what led me to doing more TQQQ, is what did I do right? I know most of the time we talk about what you do wrong and trying to
Hmm.
correct what you do wrong. And I think there's certain non negotiables that you absolutely have to correct. Managing risk, whether it is through stop loss or whether it's through like I tend to use position size more because I was not able to quickly get out sometimes with even a 7 or 8% stop loss. And now, not to go off on a tangent, but you guys talk about the average true range. And I realized probably why I couldn't effectively execute 7 or 8% stop losses because the stocks I was trading were very volatile. So
Yeah.
they could do that in a day. Um, you know, but I'm sorry, I like lost my a train of thought. So I was saying that we were going to
Starting with the
segue
post
into,
analysis.
yes,
Yeah.
post analysis. Yes. So yes. So as long as you're managing your risk and like your because you need the capital to move forward, I focus on what I do right because I'm
Yes.
playing to my strengths and that comes more naturally. So that's what I recommend to people, that when you're trying to find a style that works for you, and we talked about the US Investing Championship, and if you listen to the interviews with different people that have won, everyone has a very different style. So you have to find one that plays to your strengths. And that's what I found in my reflections. So some of my strengths are which I define them as strengths. Maybe other people may not, but I'm able to handle volatility. And I'm prepared for that, whether it's with a growth stock or whether it's TQQQ. And I manage that through position size. Um, Volatility. I can also handle drawdowns. So I don't like drawdowns. I don't think anybody likes drawdowns. But if I'm prepared up front, and I make those decisions when the stock is on its way up, I'm not trying to like when Friday happened, particularly for TQQQ, I already knew in advance that I had already been raising cash. So I
Hmm.
wasn't panicked on that day because I had been selling on the way up. But I try to definitely leverage to my strengths, and that's part of what I've done with my
Hmm.
post analysis.
Well, you know what? Let's go ahead and talk a little bit about because you know, let's address the elephant in the room, which is Friday, right? So maybe you could share a little bit of what was it, and this is TQQQ, and I should
Yeah.
mention. Viva, you're a little different. I think a lot of people, when you're, because when I use TQQQ myself, a lot of times I'm doing my signals based on QQQ, the
Hmm.
non-leveraged version. I'm looking at that and saying, "Oh, okay, well, we're crossing the 21-day moving average line. We're getting support at the 50-day." But you actually say, "You know what? I'm going to get to know the TQQQ chart so well,
Yes.
and that's what you're using as your instrument." So it should be mentioned, as you said, Friday was down 10.5% on that day. What were you seeing that was making you start to raise cash a little bit before that day?
Okay. So one of the sell signals I use is when we have a stalling day or a downside reversal day after the stock has been up for some time. So I had actually started raising cash on July 31st. So if you go to July 31st,
Right there.
yes.
Hmm.
So it wasn't at a all-time high, or it wasn't at a 52-week high, but I had bought on April 22nd, and at around $48, I believe. So it had had a big gain. And historically, in my portfolio, I tend to see my biggest drawdowns happen in February and August. It's just a function of maybe the types of stocks that I buy. So I tend to get a little bit defensive at the end of July, early August when I have a profit, just so I can lock some gains in.
Hmm.
So I raised some cash. I think I sold 10% of my TQQQ position on that day. The next day that I sold was the stalling day, or I don't know if it was technically stalling, but the 96.32 that day, when we made a all-time high, but then it closed at the bottom of the range. So I believe it was August 13th. So I
Hmm.
sold another 15% of my position on during that day. So, and then I didn't add anything back because historically August has been a weak month for me. I was still 75% invested in my TQQQ position. That's not my whole portfolio, but of my TQQQ, I was 75% invested. And so when we've had these bad days, and if I had not raised cash, definitely on Friday I would have raised more. But because it was one bad day, but I was already at 25% cash and I had sold on the way up, I decided to wait a few days to see what would happen, and would we be able to retake the 21 EMA? Would we pull back to the 50 days? So I was not looking to add back at this point, but I felt like because of the cash I had already raised, I could wait a few days to see what transpires before taking further selling action.
Hmm. So let's just back up a little bit because okay, you were selling a little bit here on
Mhm.
these downside reversals, stalling action, but when you kind of got this test of the 50-day moving average line and
Mhm.
back into new high ground, um, I mean, you were outside of August at that point. It was September. Uh, what made you decide to not kind of repurchase?
Mhm. So I have, like kind of two buy signals that I look at. One is when we have a follow through day, and the other is once we've had like if you look at how volatile TQQQ is, there's a couple of times, there's several times during the year where you go, where you can have a 25 or 30% or even more. Like let's forget this V-shaped recovery, that's a little unusual. You can
Hmm.
have a couple of those happen during the course of the year. So my goal is to try to get in as close to that market turn as possible, but I don't generally add on the way up unless we've had another intermediate market pullback. And generally for me, an intermediate market pullback is when you look at the main composite indexes, not TQQQ or QQQ, but if you look at, say, the NASDAQ composite, if it has pulled back like 5% to 8%, something like that, after that, I start looking for where can I get in. So even though we've had pullbacks, they've still been relatively mild. I mean, Friday was a bad day, of course,
Hmm.
but because I'm trying to stay in as long as I can, and I think yes, for a true a swing trader, adding at that 50-day moving average and then kind of like getting out on maybe what happened on Friday is definitely something people can do. But my goal is to try to stay in a little bit longer, and so I usually initiate my entries after we've had an intermediate pullback. And one thing, you had Eric Krell on your show, and he talked about I need to go back and look at his slide, but I think he was sharing something similar about during the course. He did a much more extensive analysis than I've done, but that over the course of a year you do have these
Right.
trends that happen. And with my TQQQ strategy, my goal is to get in as early during that trend as I can and try to hold it as long as I can instead of
Hmm.
all the in between wiggles and wobbles, as you
Hmm.
guys call them.
Right. Well, and to your point, this was basically a 4.1% pullback.
Mhm.
So when you're saying, "Oh, I'm looking for at least 5 to 8," this certainly didn't qualify. But what about here, where you get like a support level, like at the 50-day
Mhm.
moving average line? And so again, I'm looking at on the Nasdaq,
Mhm.
the 2nd of September. So again, you weren't even at 5%. You were just barely over
Mhm.
4%
Mhm.
correction at that point. But does that ever kind of tempt you, especially
Yes,
on an
it
upside reversal, right?
100%. I would be tempted in that, but also as I had mentioned before, like in January, I made some mistakes of where I forced trades, and one of the things that are part of my rules is I try to wait for a couple of days of strength. And
Hmm.
so this one day, it was day one of strength, and it was really good. But a few times I've experimented this year where I think something, which in retrospect they weren't strong days, but this one definitely I think people could enter because you can set a stop loss at the 50-day moving average, and you would be able to get out without doing too much damage. But again, at this point, I was already 75% invested in my position. And so I didn't feel that I needed to go back up to 100. And then the one other aspect I wanted to share is that I do also use TQQQ as a source of funds, as we've talked about. So, which is the other
Yes.
reason I try to get in earlier during the cycle. And I'm very interested in what's been happening with a lot of these IPOs. And I haven't gotten into any of them yet. And in fact, I'm going to go back and read the IPO lifecycle trade. I always like to give a shout out to Kathy Donnelly and the team that worked on that book. I think they've done a great job because it's reminding me a little bit of, in 2021, a lot of the success I had in the investing championship that year. I had a triple digit return. I was trading things like Upstart,
Hmm.
Affirm. I had a bunch of IPOs that had a lot of heat. And the last few years have not been as conducive to that, but I feel like now, with hopefully more rate easing happening, and it just seems when you look at like like the Figmas and the Core Weaves, and again, I haven't gotten into those, but there's a lot of heat happening, and so I want to have some cash set aside so that when I figure out what the right time is to enter some of these IPOs, that I've got the cash to do that.
Hmm. And how do you usually split up your TQQQ between your growth stock investing?
So over the last few years, my ratio has shifted. So I try to have between 25 to 50% in TQQQ. Generally, 25 is where I start with. And then because of the timing of how I get in, it tends to grow to be like, 50% or more of my portfolio by the end of the year. And then I raise cash and then I sell
Hmm.
down. So, right now my portfolio is more than 50% TQQQ just because of how much TQQ has grown, which is why I'm not looking to add
Right.
more back in.
Uh-huh.
But like in say like my target would be to have 25% in TQQQ, 50% in individual stocks, and then have cash to be able to enter whatever looks right. And part of why I went with a higher TQQQ position is because I mentioned that I manage my risk in growth stocks using position size, not so much like a 7 or 8% stop loss.
Right.
But I also am, cognizant of Bill's teaching that, you don't want to have a huge number of stocks because it's hard to manage them. So the maximum position size that I will go into on an individual stock is 10%. That's the maximum. A lot of times I start smaller than that. And so when I have smaller TQQQ positions, I end up with a lot of, more stocks than I can actually manage properly. So
Hmm.
that's why the 25 to 50 is sort of the target that works for me. And as you said, I do watch it very closely. And even if I'm traveling, and because I sell into strength, I'm able to kind of weather those, ups and downs a little bit better than I could for an individual stock where you have to pay attention to earnings and you can have a bad day that's based on news that it's harder to control that, I
Hmm.
think.
Yeah. No, absolutely. And I guess that's another question because again with TQQQ moving a little bit more, and especially when you get in what we kind of feel like we're in right now, where there's kind of news batting you back and forth, and recognizing that the moves again are so much bigger in the triple leverage. Um, so to me, you have a kind of a stomach of steel
I
to a
do.
large degree, where you're able to take that drawdown and kind of say, nope, it hasn't triggered a rule yet, so I'm still okay. So you've been really working on refining your sell rules to a degree. Has there been
Yes.
any like major thing that you've come up with that's like, oh, this is something that really I think could make a difference for me in the future?
I think the 21 EMA.
Hmm.
So, my original rule would be like, one close below the 21 EMA. But over the past year, as I've actually looked at what's been happening, I look for two closes below the 21 EMA. And that's why on that Friday, and again, Friday triggered, it was the biggest down day since December 18th, 2024. In fact, it looked almost exactly like December
Yes.
18th, uh, 2024. So, but because, as I said, I had already raised cash on the way up, I was able to give it some room. And again, I got in at the end of April, right? So I have a profit cushion. So if this down day had happened, like, so let's say I got in April 22nd, if the day that we had on Friday, if that had happened a week after I had entered my position, I would be selling a lot
Hmm.
because, but because I had a profit cushion and it was one bad day after we've had so many good days, you're going to have those bad days. And the one other thing that I would mention, particularly in a year like we've had this year, I know 10% in TQQQ sounds like a lot, but Nvidia was down 17% in a day and it's a huge
Yeah.
stock. You look at these IPOs, they're all over the place. So I think that if you're going to be trading, whether it's individual stocks or triple leverage, of course, you have to be prepared that there's going to be big swings sometimes, and you have to know in advance how you will handle that because I've learned this over time. Otherwise, for sure, it's very easy to panic when
Hmm.
something like that happens.
Right. And it's worth mentioning that again, you got to remember you're dealing with an index. So even though it is triple leveraged, the 20, we often look at the ATR, the average true range, and the 21 ATR percentage on TQQQ is only 3.68. So it's kind of in line with maybe like Zscaler, NVIDIA that you mentioned. Um, it's certainly less than like a Celestica or, even, I mean, really, it's actually kind of close to the ARC Innovation ETF. So
Hmm.
this isn't leveraged, but you kind of have an ATR that's similar
Hmm.
to the Kathy Wood Fund. So yeah, I agree with you. It's not like you're you're going crazy here in terms of your risk. It feels that way sometimes because it's triple whatever the market does,
Hmm.
but compared to an individual stock,
Hmm.
and you also don't have, I guess, the situation where, okay, one bad earnings report and you're toast.
Yeah. And that's the thing that's interesting. I have always considered myself somebody who really pays attention to the fundamentals first. And then once I started learning the chart, which after how to make money in stocks, I started to learn technicals too. I was able to significantly improve my results. But I did spend a lot of time analyzing the fundamentals. And the good thing with TQQQ is I don't worry about the fundamentals. I focus on the technicals, but some of the art that's still part of TQQQ is I am aware of when the Magnificent Seven, I am aware when they have an earnings report coming up.
Hmm.
And only because if they do have a significant up or down, that it will have probably a greater impact on TQQQ. But it's more that I'm aware of it versus, really taking action. But it's just a
Hmm.
nuance that I try to keep in mind during earnings season.
Hmm. I should have also mentioned, just because we always have to disclose, I was mentioning ARK-K because of the ATR being similar, but I do have a position in that myself, so we always have to disclose that. You also mentioned, Viba, how one of the things you've been looking at as a sell signal is instead of just one day, you're looking at 2 days. But there's also these situations where, okay, it closed below here, it closed below the 21-day here, but this was a support day. So do you ever
Mhm.
kind of say, oh, well, I'm gonna give it a little bit more room there?
Yes,
Or okay.
100%. And again, it's kind of also connected to because I sell on the way up, I generally have like, some cash and I have that comfort level that okay, I've been selling on the way up. But I do look at the support levels, and that's why, for example, you were asking me about like the or I mentioned the 21 EMA, and I said I look at two closes below, but if the second day is there's support, then I'm going to wait and see what happens on the third day.
Hmm.
So that's why that signal to me is a little bit more of an art than a science, because you sort of look for, even if it's a down day, if it's showing support, then I will give it a little bit more room. Again, especially if it happens after I already have a profit cushion. When
Hmm.
those things happen at the beginning of just initiating an entry, then I don't give
Hmm.
it that much room.
Yeah, makes sense. So since we're talking about triple leveraged, I want to kind of just throw this out to you. TNA. So this is, and I do have a position in TNA myself. I do like using TQQQ as well. Sometimes I'll use UPRO. I kind of go back and forth, but right now I'm a little bit more focused on TNA because of what's been going on with the Russell 2000. So I'm going to
Mm-hmm.
pull up the IWM, which is the non-leveraged version, and certainly this had a ugly Friday along with
Mm-hmm.
all the indexes. But what interested me here was that this kind of recovered a little bit faster to highs. I should
Mm-hmm.
also mention that this is something I've been playing. Well, I've played it a few times, not successfully because there have been a lot of fits and starts. But this most recent one was, I think, a little bit more down here and kind of rode it along the 21-day moving average line. I did get out of the position there, but I started getting right back in here. Is this something that you're looking at as well, or do you just like, nah? I know TQQQ much better. I'm gonna stick with what I know.
So there's two answers to your question. So one is I had not been looking at this until you brought it to my attention on Monday when we were just chatting. So now this is on my radar. And the other piece of this though is even though I am a huge fan of TQQQ and I've been very successful with it, you know, your strategies also have to be adaptable, right?
Yeah.
And knowing that the you know, rates are coming down, and based on what you were saying, yeah, Russell 2000 has not done well for a long time, but it looks like it's, you know, starting to possibly outperform, then I'm going to be adaptable to that. And you know, in all honesty, I don't know the TNA chart that well. I would probably start with a small enough position that even if it had a very bad day, that I wouldn't be tempted to get all out, you know. So I
Hmm.
would definitely do a way smaller position in that just because I'm not familiar with it. But I do think that it's important for people to adapt their strategies. And you know, the Magnificent Seven, the Fang, the Qs, they've done well for a really long time, and but that doesn't mean that that's going to continue forever. So you have to always be looking. And I do feel much more comfortable, I think, with ETFs in this situation than maybe an individual stock that might be super volatile if I don't know how to handle it.
Hmm. And I should mention, again, because we did talk about the ATR for TQQQ, the Russell 2000 is more volatile. And as an extension of that, the triple leverage TNA, which I do have a position in, is also more volatile. So I mentioned 3.68 is the 21% ATR percentage. For TNA. That's at 5.16. So it's definitely up there in the ATR side.
And Justin,
Um,
can you just go to the weekly chart on
sure.
this?
For TNA or for IWM?
For no, for TNA, for TNA.
Hmm.
I'm just curious. Yeah, and I mean it does look like it's starting to approach like a 52-week high, right? So generally if it shows strength above that, that will hopefully be a promising sign for it to continue to go
Yeah,
from there.
and it definitely suffered, as you mentioned, quite a bit in the 2022 time period, as the rates were increasing, inflation and everything else that was going on, and the recovery. While there have been a number of these attempts, it seems like it was only the the trend was only lasting a week, and then it was going
Yeah.
back down. So that was the problem with a lot of these. But this one seems to be a little bit better. Viva, I also want to shift over because we've been talking a lot about the index ETFs and all of that. I want to shift a little bit more to remind folks that there's this whole other thing that you're doing on the growth stock side, but even that, you tend to keep things simple. So just walk people or remind them of some of the things that you're doing to really narrow your list down considerably, because you really don't have thousands of stocks that you're choosing from. You've really kind of already narrowed your universe down of what you even gets on
Mhm.
your radar.
Yes, and this really started with when I was still working full time. I
Hmm.
had, you know, I've told you my background before. I had a crazy job, worked, you know, 60 to 70 hours, young kids, or definitely at least 60 hours, not always 70, just sometimes, but, you know, had young kids. I was raising a family. I was focused on my career, but I was committed to learning how to be a better investor because when I was in my 30s, I set a goal of I was going to retire by the time I was 45. And so again, things moved a lot slower then than they do now, but I had a 10-year window that I was working on. But so I really didn't have a lot of extra time. So that's where you know, your tools, Investors Business Daily, was super helpful for me because I didn't do my own screening. I looked at your IBD 50, I looked at sector leaders, and I looked at IPO leaders. And that's what I used to build my watch list. And I always started with the fundamentals. And then when I identified stocks that had the fundamentals I was interested in, then I would wait for the proper time to enter them. So I never looked at thousands of screens and I never evaluated thousands of stocks. Typically, at any point in time, I never had more than 5 to 10 at the most on my list.
Hmm. I also just put up the Innovator IBD 50 ETF. So yeah, this has actually had quite the year. It's been very and look, on the weekly chart, you can see that there have been a lot of times of underperformance, of course, in 2022, underperforming during that bear market. But this year really turned around. And it's funny because I don't know about you, but I've been a little bit of surprised sometimes at the makeup of the IBD 50. Like, how many gold stocks have been in there and everything. Like, but it's also, even despite that move on Friday, a lot of the more speculative names, whether
Hmm.
it's in the nuclear space, the quantum computing, usually you would expect when, you see people running for the hills, the speculative stocks, you would expect to kind of take the harder hit. But some of those seem to weather the storm a little bit better. Does that seem usual to you?
I tend to just look at what's happening and then decide what to do from that. Like I don't really have a good feel for whether that's usual or unusual at this
Hmm.
point, but we'll see what happens. But I've definitely had very good success when I stick with it. And I say IBD 50, but a lot of times, Justin, I would just look at the first page, which was the top 15,
Yeah.
and then go to sector leaders and go to like the other screens that you guys run and then just go from there.
Okay, yeah, makes sense. Well, let's kind of shift a little bit to talk about some of the growth stocks that have been on your radar to a degree, and I'll go ahead and start with Hood. I do have a
Mhm.
position in this myself, so this is Robinhood, which I'm not sure if you caught it, but we did have the chief brokerage officer on the show a month or so ago. So uh, I did have a position in this, and I thought I had to sell it. I wasn't sure what the compliance rules were. So since he was on the show, I'm like, okay, I got to
Oh,
sell it in here. And then now it's been tough getting my position back. So
mm,
tell me about how you've been handling this one.
yes. So I bought this on 4/24, so 2 days after the follow through day. Um, and if you can go to the
Okay, so
4/24.
right there. So you got a much better entry than I did.
So, and it goes back to some of the things I was talking about, that there were 3 days of strength and it had retaken the 50-day moving average.
Hmm.
So, and it was very soon after follow through day. So it was like early in the move. I had debated because it was when I bought it, it was like $48, I think. So it was still below that 49.88. So, like, when you look at the chart, it could potentially be that that's kind of like a double bottom here, and the
Hmm.
49.88 might have been a better place to get in. But because I sized to the 10-week or the 50-day moving averages, I felt like I had a good enough place to get in and where I would be able to get out if I was wrong. And so I have not added to it. I'm holding on to my original position,
Hmm.
and but it is on my radar because I think right now it is a little bit extended. But for people that have a shorter term time frame of the consolidations they look at, I mean, the pullback has been in lower volume and it still seems relatively orderly. It's holding above the 21 EMA. So I think it's one to keep an eye on. And I love they have really good fundamentals. This is currently number 6 on your IBD 50, or was as of last week. Um, and they've got multiple quarters of triple digit sales. Sorry, triple digit. Well, they have triple digits,
Earnings
so
growth.
mainly triple digit earnings. They've
Yeah,
got
yeah. The
multiple
triple
quarters of
digit
triple
sales
digit.
was,
Was just one, right? But
yeah,
the sales are still good. But yeah, they have
yes.
multiple quarters of triple digit earnings, and a lot of young adults that I
Hmm.
know do use this platform. So I'm always keeping an eye out. I know you've teased me before that I tend to do whatever my kids do, but I do try to look for those trends because people have been using it for some time. I originally had Hood, like, I think it was during the 2020 or 2021 market, but then I had to get out. But I got back in recently, and I think this is they're innovative, they're disruptive. I will go back and listen to the interview you did with the CEO. I have not heard that, but this feels to me like it has the potential to go for some time. Um,
Hmm. And I will say, rather than waiting for that 49.88, which I feel like even if you had done that, you would have been fine,
yeah.
you know, compared to what it did. But, there was kind of this little area of resistance here as well. Now, you talked little bit about your TQQQ cell signals. What do you use for cell signals on an individual stock?
Um, So, some of them are similar, but the biggest difference is with individual stocks, I focus on the weekly chart. And I do look at the daily chart for my entries. And when I first enter, Individual stock, if it violates my sell rules, which are going to be typically, I try to size to a technical moving average rather than 7% or 8%. So I will back into my position size. So at the time, for example, that I bought Hood, I think it was relatively close to the 50-day, but
Right.
we can see.
Yeah, I was just above it. So
Yeah,
you
but let's
probably
say
on that day,
hypothetically,
let's see, you were probably
7%, right?
yeah, 7%.
6.9.
Hmm.
Yeah. So, but let's just say, like, hypothetically, if it was 11 or 12% above, but I felt like, I really like the fundamentals and I like the story and I want to get in, I would go with a smaller position size so that I could allow it to go down to that. And when I say go down to it, just because it goes down one day doesn't mean I get out, but I want to give myself room to see where it closes the week, and I want to give myself room to, kind of see what happens over a few days instead of just selling in one day, but I want to limit my losses. So I do that by going in with a smaller position size. And I know that that's not the approach that many people use, or even that Bill had recommended, but it goes back to, what I said about style or a strategy. You have to have a strategy that you can execute, and I
Absolutely.
struggled with a 7%, 8% stop loss, not because I didn't understand it or agree with it. It's just by the time I would see it, because again, I was working. Now you can, trade on your phone and do whatever. But when I started trading the IBD growth stocks, I couldn't look at my phone during the daytime or trade with it during the daytime. So sometimes by the time I realized it had already gone down 12 or 15%. So I realized that no, I have to set a smaller position size in order to let it pull back sometimes to what those averages are. So the primary difference, I would say, between my TQQQ strategy and my individual growth strategy is that I focus on weekly charts and I have much smaller positions.
Hmm. Now, do you ever start small and add? If you get another opportunity, let's say a flat area. I mean, one could look at Hood, in particular, like, oh, here was the first test of the 50-day moving average line. Or if
Mhm.
you were looking at a weekly chart, the first test of the 10-week moving average line. Now,
Mhm.
granted, it was really far up there. I mean, you already doubled, so
Yes.
that's tough. But I'm just wondering, again, if you start small, do you ever look for opportunities to increase the position to a more normal size for
Mhm.
yourself?
That's a good question. I have not actually done that in recent years because I don't have a paycheck coming in, so generally I have to sell something else in order
Mm,
to add. And because of the amount of time that I want to spend, I generally prefer to enter my individual stock positions also after like a decent correction, because that allows me to hold them for longer periods of time and have a profit cushion, because I am willing to sit through bases. I think I heard Kathy Donnelly say once, like, BOSS, buy once, sit still, or something along those lines. And
yeah.
so that's more my preference to do that too. So
Mhm.
yes, you're absolutely right that if I look at the technical spots on the chart, there are plenty of places to add, but that will require me to be much more vigilant with the daily charts and will require a much greater time commitment than I've generally been willing to put in. That being said, when we have a intermediate pullback, and then if I see another opportunity to get in and it's one of the top things I want to get into, then sure, I would consider redeploying money from something else to add.
Hmm. Makes sense. Well, another stock that you had on your radar is Palantir.
Mhm.
So, and I Oh, you know what? I don't have a position in this anymore. I got shaken out on this day right here. So this is back to kind of news related.
Mhm.
News came out in terms of a potential security flaw, I believe, in one of their programs, and they refuted that. But since that day, there's been a little bit of back and forth action. Yesterday, nice support of the 50-day moving average line and an upside reversal. But how are you handling this one?
This one I bought on April 22nd, which was the follow through day. So I have a pretty good cushion in this. And so, right now it's going sideways. And I don't like, the one thing I don't like about this is the RS line. Generally, like, when if I were looking to say initiate a position, I would want there to be rising RS line. It's kind of been going sideways. But this one also, it has great fundamentals, and it's one that I had been watching for some time, but last year there was just not a good place for me to get in. So when we had the correction this year, then that was my opportunity to get in this. So I'm holding it. I'm not adding right now, but I'm just keeping an eye on it. But I have enough of a profit cushion that as long as the weekly the 10-week moving average, it closes above that, and kind of, even if it has a pullback, it's been on, again, lower volume. It's not really showing any sell signal to me from a longer term perspective.
Now, a lot of people talk about the CEO, and again, on the fundamental side, you might look at the CEO and or even a lot of the things that this company is doing. How much reading do you do beyond just, oh, let me just look at the numbers here? How much
Mhm.
reading do you do in the fundamentals to kind of understand what the prospects are,
Mhm.
or what kind of strength you have on that side
Mhm.
for a
I
stock?
do. I mainly I read the articles that you guys share. I really like the weekly paper, and a lot of times the stocks that have come across my radar screen, I find them on New America. So
Mm,
even before they may be at a proper buy point, it still kind of gets on my watch list. And then once I start, once I identify a stock either from your screen or from the New America, then I do pay attention to the articles that you guys share. And ideally, like again, with retail stocks and with some other ones, I like to find people that have used their products and kind of get their perspective on it, so that I'm kind of testing it with that too, and not just looking at what the numbers show.
hmm Are there any stocks that you've kind of you're stalking, maybe, where it's the ones that have gotten away, where you're trying to find an opportunity to get into them?
Palantir was one of those earlier
Mm-hmm.
this year. For right now, I would like to be able to get into CoreWeave,
Mm-hmm.
um, but I tried that earlier this year and I got shaken out. It was so volatile, but that's why I'm going to go back and reread the IPO book and learn from the experts. I know Eve
Right.
has done an interview with you guys too, so I'm going to go back and listen to that. But this is one that, based on listening to the IPO experts describe, I would like to. I've been stalking this. I'm not in it, but I'm going to try to find a place to get in.
Uh-huh. I'm looking at the YouTube comments here. Just gonna look for any particular questions that have come out. One that kind of stuck out to me was whether or not you use stochastics at all for your timing.
I don't. I really try to keep things as simple as possible. And for most of my trading slash investing journey, I was primarily focused on fundamentals and valuations. Technical is something I've really learned, like say in the past 10 years, which 10 years is probably a lifetime to some of your listeners,
Yeah.
but for me, it's still fairly,
Yeah.
and really it's more like the last 5 years that I really have,
Uh-huh.
once I entered the US investing championship, that's when I really started paying more attention to the technicals. But I just try to keep things simple, because there's so many things you can look at, and sometimes they send you conflicting signals.
Yeah.
So far I've used what allows me to not have to spend a lot of time, and has worked the majority of the time for the way I
Mhm.
trade.
Well, and again, I want to repeat something that you said earlier, because I think it's so important. You need to have a plan that you're able to execute. And I think sometimes if you use too many technical indicators and you get those mixed signals, then you get into an execution problem where it's like,
Hmm.
oh, I don't know what to pull the trigger on because I'm getting the conflicting signals. And so I did put the stochastics up here. I think there is absolutely value to them, but you again have to be very careful, because there have been many times where the stochastics are telling me one thing,
Hmm.
the price action is telling me something else, the support at the moving average lines is telling me another thing, and yeah, it gets a little
Yeah,
crazy.
I had one guy who he wanted to show me his dashboard, and his dashboard had 100 technical indicators on it.
Hmm.
And he was an engineer. And I said, wow, I said, how do you know what to prioritize? And he said, well, that's where I was hoping you could help me. And I said, I only look at a few
Right.
things. So I said, I have no idea how to react to your 100
Mhm.
signals, but it reminds me of, again, in my job, we sometimes we had dashboards that had like 100 slides. And how can you have a dashboard with 100 slides? What do you focus on?
Yeah.
So I try to keep it simple, and that's where I think the post analysis, which is what I recommended to this person, comes in super helpful, because you can look at whatever indicators you have and see which ones really had the most impact in terms of your success. And that's part of, honestly, what I'm doing for TQQQ, also for when I do this masterclass, because there were a few sell signals that I had, such as a close below the 10-day moving average, but I realized that I hardly used that. And a lot of times when it did close, it would be something like what we saw on Friday, where it closes below the 10 and also the 21. So I've now kind of shifted to paying attention to the 21. So I would encourage people that, yes, use whatever signals work for you that you can execute. But, when you do have time, go back and look at what you have and see, like, if there's ones that really have had the greatest impact, then really master those, figure out how to master those, and that will probably help your results.
Hmm. Yeah, very good. Let's see, a couple more questions. Some folks were asking about why I'm wearing the same shirt. I promise I did laundry. I actually have three shirts that look very similar on video. They're different patterns, but they look almost the same. Someone was suggesting Costco has great deals, and I do love getting things at Costco. I agree. The last question here, because someone was asking if you were talking about how you use TQQQ as a source of funds. So again, going back to the follow through day. Here we have the follow through day on April 22nd. Um, how big did you say you started TQQQ, and at what point did you start saying, oh, okay, I want to get into more stocks, and I'm going to use TQQQ as a source of funds?
Hmm. So I started the follow through day. I started with 25% of my
Hmm.
position, and I was able to add a couple of stocks over. I added Palantir that day, and then I added Robinhood 2 days later.
Hmm.
And then on 4/24, I took the rest of the cash that I wanted to invest, and I put that into TQQQ, because at that point there wasn't any other individual stock. And also remember, we have this V-shaped recovery, right?
Yeah.
So when that happens, you never know, is it going to be a V-shaped recovery, is it going to be a double bottom? So generally when we have a V-shaped recovery, I tend to only initiate a few individual stock positions, because I want to just make sure that they work. And then I'm more likely to go heavier on the TQQQ, because I can get out of that pretty fast.
Hmm. Awesome. Well, Viva, it's always a pleasure chatting with you. You, again, I think it's so great how much you are dedicating yourself to the education side of things. And again, you've had such great success that it's kind of giving you the freedom to do that. So I think that's awesome. And thank you so much for sharing this with my audience.
Thank you for having me. It's always a pleasure.
Absolutely. Okay. That's going to wrap it up for us this week. Next week, I think we're a little bit going back and forth, because at our recent Founders Club meeting, Chris was saying, Chris Gessel, who is my boss, the Chief Content Officer of Investors Business Daily, was talking about wanting to come on again for a hedging strategy lesson, especially since we have earnings season coming upon us. So we may be shifting gears to that soon. We're just not sure where to slot them in. So I'm going to hold off on saying who our guest is going to be next week. We also have Tom Basso in the wings later on this month, Mark Minervini. So we've got some great guests coming up. So definitely check us out. Also, you can check out the investors.com X handle, where you can find out when and who is going to be our guest spots. But that's going to wrap it up for us this week. Thank you so much for watching, and we'll see you next time. Take care, everybody.